Hi there, this is Chris from MoneyHub, and this video looks at the AMP KiwiSaver scheme. So this is one of the largest schemes in the KiwiSaver realm. It's currently around 6th largest in terms of funds under management. That's at June 2024. Of course, that can change at any time as other schemes move around. But it's been running, it's one of the longest running, and it's got about $6.5 billion under management. Now, what we're going to do is go through exactly how the KiwiSaver scheme works and the funds available and sort of understand how they present their returns, their fees, and everything else. So let's just go straight into it. We're in the AMP KiwiSaver website now, and you can see that there's a few things to look at: the benefits, the performance, and the fees, and some calculators. We're going to go straight into the funds rather than look at anything else. So if we just go into funds and performance, we can see that there are lots of funds available under the AMP scheme, and some of them are their own funds, which will be marked with, for example, AMP Aggressive Fund or AMP Australian Shares Fund. But if we go down, we will see where they've also used other fund managers' funds. And so you can see the Mercer Balance Fund, and as well as Milford. So Milford Asset Management, quite a popular KiwiSaver and actually investment fund manager. AMP also provides funds there as well, plus Superlife, which is the NZX's KiwiSaver scheme, and it's the KiwiSaver scheme that's the equivalent of Smart Shares. So without further ado, I'm just going to go and select a couple of these to walk through exactly how it all works, so you can understand if you're looking to change funds or just sort of understand your own fund. So let's go with growth. So we can filter there. We can see that they have a variety of funds, Superlife plus the Milford as well as their own. And if we go aggressive, then we can see something similar as well. They have an aggressive fund, they have the shares fund, which is classed as aggressive, and as well as they have the Milford. So let's go back to growth, and let's just click on one of these here. So let's go to the Milford Active Growth. This is one of the more popular of the funds. And if we click on track fund history, so first off, we can see that the fee is 1.65% per year. So if you had $1,000 that was invested, then your fee would be $16.50. That's charged per month, or it's not charged per month. The $16.50, they make a calculation. So across the year, you'd pay 1.65% of your funds under management. Now, let's go straight into this as I've loaded it up. And what you can see is that the investment risk, now this is required by the Financial Markets Authority, and they have to select based on the investment objectives where it fits. And this one is rated 5 out of 7, or sort of classed as 5 out of 7. So the riskier and the potentially higher returns will be a 7. And then you'll get very conservative and low risk funds like a cash fund, or something that just invests in bank accounts, or bank deposits. That will be number 1. So what they've said is Milford has said, actually, because this is coming from Milford as a Milford fund, that the objective is to provide an annual return of 10%. So 10% after fees. And what they've said there is that, the minimum suggested time frame is 7 years. So this is not something that you come in and out of, because of course the fund can go down in the short term. And then you can see here that there's a member fee per year. That's of $23.40. Now that's charged for all KiwiSaver funds through AMP. So whatever you go with, you will be charged that fee. And then you can see here, as I previously said, the 1.65%. Now, if we have a look at the investment returns, and helpfully ANZ is quite clear with how they present this. This was updated on the 30th of April, and you can see here that within 1 year, so the last 1 year, the fund return was 12.98%. And because it seems to be a new fund which has been added, then they don't have 5-year and 3-year data. Most of the funds will through AMP, but not this one. And we can also see in the last month, so in this case, it lost 1.4%, which is very normal for these type of funds to move up and down. And you can see the unit prices. This basically is the value of the fund, and it will move every day. So as the unit price increases, then that means the fund is more valuable, so the returns have been higher. So you can see here how 1 year ago it was $1.0295, and then now it's 114.99. So that's around what the percentage said there. If it's moved around 12 cents, then 12 cents on 1.02. That's how they've calculated, although there is some stuff around tax there. So that is that. And then if we have a look at the graph of it, so you can see the 1 year return, and this is based on unit price. So you can see that the unit price does drop, and then it's gone up in this circumstance in this example in the last few months. But of course, these things can change like throughout the day, throughout the week and throughout the months, and they're updated daily. Now, what you can have a look at if you want to have a look at another fund, because I think it is quite useful just to sort of get more familiar with them. You can have a look at the AMP Growth Fund. So here you can see that their fee is 0.79%, and it's got 3 years of returns, and it averaged 3.03%. We click on this again to understand it. Once again, you're going to see that it's got the $23 annual fee for the membership. That is the annual fund charge, and it's just given an outline here, and it's saying that it aims to achieve medium to high returns, and there's going to be some big ups and downs in the value along the way. Now, they have done a sustainable investing summary, and that's part of their investment philosophy, which you can read more about by clicking on these links. Once again, the investment risk is ranked 5, and so that's just where it's positioned. And you can see the returns here. So in 12 months, it's done, in 1 year, it's done 12.46%. But over the long term, over the 3 year period, it's done an average of 303%, and then 5 year has been 5.858. So this, of course, was for 30th of April. So whenever you're looking at it, it's likely to have changed or will have changed. But that's just worth keeping sort of understanding of. And if we have a look at the unit prices graph, then we can see that certainly this fund does move around. And if we go for a 5 year, we can see, okay, up until COVID, it did drop off a bit there, bounced back at the start of January 2022. It was at an all-time high, it looks like. And then it sort of dropped a bit, and then has sort of been recovering ever since then. So you can see that these returns do move around, and that's how the AMP has presented it, which we do find quite helpful and quite transparent. If we just go to another fund just to get a final understanding, best just to go down here. You can see here that they do promote the fact that they work with Superlife, the fact they work with Mercer, and the fact they also work with Milford, plus they have their own funds. So it's just showing that you can mix and match them, so you can put some into Milford, some into Superlife, some into AMP. You've got the choice to self-select that and make the right amount or the allotment. We do a quick summary of the different fee types versus going direct within our review of AMP, so we do suggest having a read of that. So finally, if we just go for people who want to be in a balanced fund, and we can have a look at the AMP Moderate Fund, which is basically following the same as sustainable investing philosophy that the Growth Fund offered. And you can see here that it's got, of course, the membership fee, it's got the annual fund charge, which is 0.79%, and then it's looking at the returns here, and it says that it aims to achieve modest to medium returns. In exchange, there may be small movements up and down. Now here, because it's less risky, there's less investments in shares and growth assets, then it's been assessed as a 4, kind of on the midway of the scale. And then if we have a look here, we can see that the returns in the last year have been very positive, but then over the 5 year period, there's been some ups and downs. So I think that's best going to be presented with the 5-year graph. So you can see here that it's, had the COVID shock and then dropped and then dropped again and kind of moving up, but it is sort of taking a bit of an up and down approach. So that's the summary there of the AMP KiwiSaver funds. What we've done in our comprehensive review is talk about the different options, which we've linked here so you can see the funds. We've done the video, of course, which is now, we've done a comparison with Milford versus going direct. And then we've talked about some articles which have previously mentioned AMP KiwiSaver. Who's it suited to? We talk about that. And then some must-know facts specific to the AMP KiwiSaver scheme. And finally, some frequently asked questions, which are useful just to get an understanding of the scheme and where it's going, where it's been, and just generally using it. And then finally, a brief conclusion. So thank you very much for watching. If you do have any questions, then please let us know in the comments down below. We want our guides to be as comprehensive as possible, and it certainly helps us when people do leave these comments. Thanks very much, as well as questions, sorry. Thanks very much, and let us know if you need anything else.